Are you confused about the terms title and deed when it comes to property ownership? If you are, you're not alone. Today, we're going to break down the differences between these two essential real estate concepts. First up, the title. A title represents the legal ownership of a property. Think of it as the bundle of rights that comes with owning a piece of real estate. It includes the right to use, the right to sell or lease the property. And when you hold the title to a property, you are recognized as the lawful owner of that property. The title isn't a physical document though, it's a legal concept. Now, let's talk about the deed. The deed is a physical document that transfers ownership of the property from one person to another. It's what you sign when you buy or sell a house, and it's recorded with the local government to make the transaction official. In essence, while the title shows you own the property, the deed is the proof that that ownership transfer. When it comes to your mortgage, here are a few things you should know about the title and the deed. The title. This ensures the lender that you have legal ownership of the property. A clear title is crucial because it means there are no liens, disputes, or other claims against the property that could jeopardize a future mortgage. You may have heard of something called a title search. A title search is crucial in the mortgage process. It involves examining public records to verify the property's legal ownership and to identify any claims, liens, or encumbrances on the property. The goal is to ensure that the seller has the legal right to transfer ownership and that there are no hidden issues that could affect the buyer's ownership rights. For mortgages, a clear title is essential because it protects both the lender and the buyer from potential legal disputes or financial losses related to that property. Which brings me to title insurance. This is often required by lenders. Title insurance protects both the lender and the homeowner from title defects that could affect ownership rights after the deed is transferred. After lending for 28 years, a common question I get is, if I am on the mortgage, does that mean I automatically am on the title? No. They are completely different. Being on the mortgage does not automatically mean you are on the title. The mortgage is a loan agreement between you and the lender, while the title is about legal ownership of the property. You can be responsible for repaying a mortgage without actually owning the property if your name is not on the title. Conversely, you can be on the title as a property owner without being on the mortgage. It's important to ensure that your name is on the title if you want to have ownership rights to that property. Let's talk a little bit more about the deed as it relates to a mortgage. When you take out a mortgage, the deed is the document that transfers ownership from the property to you. Let's go a little bit deeper. The deed confirms who legally owns the property. As I mentioned, you're on the deed. You have legal ownership, even if you're not on the mortgage. When you take out a mortgage, the lender places a lien on the property through the deed. This means that the lender has a legal claim to the property until the mortgage is paid off. There are various types of deeds, and they offer different levels of protection and guarantees about the same property's title status. All right, so let's dig in. Hang on, I know this is a long one, but there's a lot here. 1, the warranty deed. The warranty deed offers the highest level of protection to the buyer, guaranteeing that the seller holds clear title and the legal right to sell the property. It also assures that the property is free of any liens or encumbrances. Okay, number 2, special warranty deed. Similar to a warranty deed, but only guarantees against issues or claims that arose during the seller's ownership period, not before. Number 3, quitclaim deed. Provides no guarantees or warranties about the property's title. It simply transfers whatever interest the grantor has in the property, if any, to the grantee, often used between family members or to clear up title issues. Number 4, grant deed. Guarantees that the title hasn't been sold to someone else and that the property is free from encumbrances during the seller's ownership, except those disclosed. It's similar to a special warranty deed, but may not offer the same level of protection. Number 5, bargain and sale deed. This implies that the grantor holds the title and possession, but offers no warranties against encumbrances. It's often used in foreclosure or tax sales. And number 6, deed of trust. This is used in some states that are deed of trust states, such as Arizona, instead of a mortgage. It involves 3 parties, the borrower, which is the trustor, the lender, the beneficiary, and the trustee who holds the property title until the loan is paid off. Understanding these deeds is essential when buying property, as they define the level of protection and assurance you receive as the new owner. Wow, that was a lot of information, right? What's the most important thing to remember is that the title and the deed are not the same thing. The title is about ownership rights, while the deed is about the physical transfer of those rights. If you have any questions about home lending or the home lending process, please comment below or give us a call, 480-725-0150, and you can text that number. My team and I lend in 45 states, and we would love the opportunity to work with you and help you make your home ownership goals a reality. For future mortgage education, don't forget to subscribe.